is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
I'm host Basil Chapman, sitting in for Larry Pesavento. My pleasure to be here while Larry's away. And let's just run the numbers over here. And what we're looking at is that the Dow is up 4, S&P is about unchanged. The E-minis are up about $1.50. And a lot of these stocks, the indexes themselves, actually stocks as well, but a lot of the indexes, just like I'm showing you here, the NQ, this is the NASDAQ 100 June contract, struggling right here at that resistance point, and the fast-moving average, or let's call it the MACD line, the green line, the quicker moving average, is in fact flattening out. It isn't really moving up, and the slow stochastic is moving up, but it's still only at 39%. So when I look at this, I say, okay, so what's going on in the 120-minute chart? Actually, I'm going to the 300-minute chart. We've got one of our Dennis, who's just an outstanding proponent of the Chapman wave methodology and trades. Uses other techniques as well, but he basically uses the waveform of the Chapman wave to use his trading, uses the 300, and I always get recommendations from various people. Should I use a shorter one? Should I use a medium? What do you like? I like the 120-minute chart the best, but I love the idea of the 300, which is 5 hours, because that introduces you to a very nice medium between the daily chart, which is trading 6.5 hours, and the 60 or the 120-minute chart. It's like right in the middle. Well, when I look at this, the way I have it, it held beautifully the support level at 3629.25 Sunday night. It's gone to a peak A in the 120-minute chart, hit that resistance, that what I call the falling axe pattern, expanding wedge, and it's struggling to really break above it in the number of bars needed, but it has made a peak C so far. It needs to get above 3705.25. Either if it does it in this bar, that'll extend leg C. My suspicion is that it will make a D, and the D is just not going to be very much higher. It's going to be maybe 370,680, 3709 maybe. And then we're going to see whether or not there's a big pullback. It doesn't even have to complete this because it's a trendline resistance. It is a tertiary indicator because the daily is far more powerful and the weekly is far more powerful. And if they start to tumble, they will drag down shorter time frames. So it's going to be very important. How is this going to be a doji candle? And then all of a sudden tomorrow into Friday we spike much, much higher? I don't know. But at this particular point, you've got to be real careful that there isn't a pullback underneath 3670. 3677 is the 9-period moving average. Now, in the daily, the MACD is, as I say, kind of flattening out, but not really showing strength. There was huge volume on the way down on the 14th. I think that was Thursday. Yeah. And on Friday, Monday, Tuesday, Wednesday, and on Monday, that was on Friday. And on Monday, at the low, there was less volume and then huge volume again. So the volume aspect is 365, let's call it, and 368. So the volume down was a little bit more than the volume up. I don't necessarily look at volume, except I do look at the on-balance volume, and that's a little crazy, the chart formation here, so I can't really use it. But what I am saying is that the weekly chart, I'm going to draw this in so far. I'm just going to draw it in. This is a temporary thing. There is a flag pattern in the weekly chart that says a punch above 37.33, 40 points away from here, would be very positive and start leg E. Just make it simple. A break below, what did I say it was? A break below 36, A close underneath to the low was 3602. Yeah, a break underneath 3600 in the Nasdaq futures would be very poor. Those are the parameters I'm looking at. Okay, so I wanted to do a couple of things. Wheat. This is the continuous contract, a huge leg D up I've got, way above the 200-period exponential moving average, which had been momentary resistance, then became support. The stochastics at 88%, still very strong. The MACD is very strong. The 120-minute chart is in, whoops, wrong one, 120-minute chart. I don't know if I did anything here. Yes, I did. So let me just finish that up here. That was the low. So that's the low, and I'll just do it real quickly. The last peak was D. And in the Chapman wave methodology, what you look for is a peak A, then a peak higher peak B, then a higher peak C. Just want to double check here to see that I haven't missed anything. 693 and 48, 693 and 48. Yep, that's C. This is D right there, and this is leg E in the 120-minute chart. Getting a little bit toppy. Let me just check the stochastic and the MACD. They are way underneath the previous high. All right, we're going to be watching this real closely. No signal just yet. I have to say there's a chance that within 2 days there might be a consolidation starting in the wheat. The corn, this is the continuous contract. They're very close to the actual contracts. They get smoothed out so the monthly chart continues instead of just having the short period of the futures. It goes on and on and on. Leg B in the weekly, leg D top in the corn. It's in the consolidation phase with the 200-period moving average of 477, support and resistance at 493 and a quarter. Monthly chart is just starting to improve. Weekly chart looks very good. So that's corn. I want you to look at coffee. Coffee is right now at peak F in the Chapman wave. Now let me just, I had the whole break to do it, and then I completely forgot. I'll just put it on now. Folks, I'm going to be having a webinar tomorrow night. How do I get those peaks? On Thursday and Friday, when I was talking about the Chapman wave methodology showing that coffee could, in fact, be making some kind of a top here, when I started talking about about gold making a leg up that said that there's a really good chance that if gold starts to pull back from the level that we were discussing, it could very well start to make lower highs and lower lows and turn around for a short-term top at least. Look at the GCM contract right here. Peak F in the Chapman wave, pulls back really sharply. Where to? To exactly on 1388 is the 200-period exponential moving average. The low today was 1337.90. And the MACD's turned negative, and the stochastics now below 80%, so 69. I'm going to be having a webinar on just this. There it is, front page of TFNN. Subscriber webinar by Basil Chapman on the MACD and the slow stochastic. This is going to be Thursday night, tomorrow night, Eastern Time, 6:30 to 7:30. I'm going to be going, first of all, explaining in great detail both the normal explanation and parameters given for the MACD and the slow stochastic. Then I'm going to give you my particular, the way I look at it. And then I'm going to show the application to the charts that are absolutely relevant right now. The Qs, the IWM, why, where, wherefore. I'm also going to be showing certain stocks that we either own or we'd like to own or we're shorting, etc. Now look at this. When you're looking at, well, first of all, you're going to get, we never do this. This is the first time I think we've ever done it. You're going to get the opening call, my daily service, for a month free. Usually it's 2 weeks, but this is such an important period in the market. I want you to just give it time so that you can really get a feel for how you can use my methodology. I'm going to explain, I'll try to my very best to explain the positions, the order in which I would recommend reading my newsletter. I always recommend the first one that goes out very early in the morning is the Dow chart. That's this chart right here, right here. This is the Dow chart. I explain what we're looking at, why we're looking at, how important the MACD and the slow stochastic are, how important the 9-period moving average is. I will include the 9 EMA for a little bit in the discussions. And the patterns, but there's that peak F, just like we saw in gold. I discuss why I do that. I'll discuss the overview section, peak E, and the VIX, plop, it comes down from 1822 to 1416. And now it's trying its best to find some kind of a base. But look, the 120-minute chart is saying, wait a minute, I'm just having a high-level consolidation here. Unless I take out 16,290s, then that means something else completely. Or if I break out to the upside and go above 16,390s in the Dow, there's the S&P, there's the short-term trading index by Richard Arms, there's the S&P daily. And I explain what the order would be, and that my opening, my trader's corner, the very last thing that goes out at about 8:35 every morning, that gives you a quick summation in the first paragraph, and then there are about 15 bullet points of either things that we have, we want to buy, we've got a position in, we're adding, we're subtracting, we're shorting, whatever it is, and the parameters of the TLT, the GLD, the diamonds, the SPY, the Qs, etc. So, okay. So, this is the way I'm using it. But look, in the weekly chart, still fabulous action. The MACD is good. Stochastics at 88%. So that says to me, on a worst-case basis, I'm thinking out loud here. I don't know for sure. How do I know for sure? We don't really know for sure. But I'm suspecting that somewhere between 1324 and 1318, which is the 9-period exponential moving average, and 1310, that whole area is going to be support, and then we'll see. Now, if this gets deeper, if the pullback gets deeper, we might not have to make a leg C. I was thinking we would get a C and then fail, but remember, I drew this pattern a long time ago. I don't know if I'll be able to get into patterns too much tomorrow night in the free webinar for subscribers. I might, but look, I do it on the show enough. Look, the H pattern that can go to a lowercase h pattern that can go to an M pattern. I drew this ages ago. There it is. So, and there's the A pattern that I always talk about, the Eiffel Tower, straight up and straight down. And that's what, on a shorter term basis, the daily is doing. So we're going to be watching all these different patterns very closely. Okay, now I need to do something else. I wanted to show you, that's gold. And I wanted to show you, did I do KC? I can't remember now. Coffee made a peak. Yeah, I just discussed that. A peak F. It's pulling back very sharply. Peak E in the weekly chart. I actually think coffee is kind of done for right now. I think it's overcooked, and I think that coffee is going to come back and take a period, a timeout between 180 and 170. If it breaks 170 by Tuesday, that's 180. Well, 182 is the 200-period exponential moving average. If it breaks that, coffee could very well test 168, 20 points lower, and that would be very, very interesting, 20 cents actually. So I'm looking at this, and I'll say, what's the upside? Coffee would have to break above 202 to say, I've got my strength back. I actually think the strength is fading right now. Yep, I'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman sitting in for Larry, and his show's usually right now with Trade What You See, and he's here, but he's away this week. So I said I'll be the guest host, and I don't mind. It's my pleasure. I wanted to show the feeder cattle chart, the daily. Remember, I was looking at the GCM, the gold chart made a peak F top, and I said, this is Thursday, Friday. I said it's about to turn down very sharply. Then I looked at something else a few minutes ago, the coffee, KC, and I said, peak F top there as well. Look at the technicals, but wait a minute. I've just gone to the feeder cattle continuous contract. Well, it doesn't have to be. I've got the feeder cattle continuous. And I'm not saying peak F. I'm saying that's an F. But I think it's holding so well that without changing anything, without changing my reading, my interpretation, I'm going to say, in changing my interpretation, I'm going to say it's holding so well that this very well could be a Chapman wave instant restart from peak D, and either we've got a brand new buy signal with a leg B, because look how the price held the 9-period moving average. Look how the MACD is still strong. Look at the stochastic at 90%. This is what I'm going to spend time on in my session tomorrow night. Please, I know it's starting to fill up, but we have room. This has got the most wonderful technology that we have here at TFNN, and we can take on as many. Not only that, it's archived. So I wanted it so that you could go over it and over it. I'm going to fill it up with an incredible amount of information so that I can go through it, first of all, first 20 minutes, maybe 30 minutes, and then go to all the charts that I wanted to show you the application. It's not just looking, when you look back, who's wrong? Can I not turn around and say yesterday was a cold day and be 100% correct? If yesterday I said yesterday was snowing, I'd be wrong. I'd be dumb. It didn't, in Boston, it didn't snow. So 2020 hindsight is fantastic. I want to give you some of the tools that says this is the way you can look ahead. And what it's saying is, don't get too cocky about a peak F in the Chapman wave in the daily chart of the continuous contract of feeder cattle. Continuous contract. Why? Because the MACD is still strong and the stochastics at 90%, and it just pulled back and held the 9-period moving average. Not only that, there's another little moving average behind it that is saying we're getting to a point where it could be a little toppy, but it still gives it enough room to today's high is 177, 250. And yesterday's high was 178, 125. Yesterday, the day before that. So that says this is already at peak F/B. And if there's a high above 178, 125, it starts leg C and it should go to a D. That doesn't tell you how far it'll go. It just tells you it'll go higher. It's a forward-looking indicator. So I look at the doji and I say, gee, today's Wednesday. That means maybe Thursday or Friday could pop up. We get a candle here that's going to be very interesting. Could be a doji candle. I'm going to be watching the candle next week because that's going to be very critical to a number of things if we close with some kind of a doji candle on Friday afternoon at 4 o'clock. So I just wanted to go a couple of readings here of what I'll be looking at, and I'll be showing you come tomorrow night at 6:30. Now, there are a couple of things that I also need to do. I just want to go back and show you something about high-grade copper. High-grade copper bouncing off the low today, but that low is saying, let me just pull this chart back right here. This is the continuous contract as well, that in fact, the downside activity since the high was made back on the 2nd of January at 3.39, well, I shouldn't give you the number. That's because of the continuous contract. That's always changing. But from the high of January the 2nd, look, lower highs, lower lows, lower highs, and then a waterfall cascade, a Grand Canyon cliff to the downside, and it goes even lower. So it says, yes, we're oversold to the extent that the stochastics at 12%, but 12% is like 88% on the upside, and you can stay at 88%. But in the daily chart, the longer you stay down in the teens, especially if you start to slip into the single digits, that's the equivalent of being very poor action, not oversold, but in an oversold territory. I don't even like the word oversold. In very poor territory. It needs to get back to the 20s to show some kind of strength. So that's the daily. The weekly chart is in the 14% area, and the monthly is in 27. Copper is saying internationally, building is starting, has been slowing for a couple of months. I'll be back. Basil Chapman sitting in for Larry's Trade What You See, and I'll be right back. Dow's down 5, S&P's down 52 cents.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor?
And peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back, and Dow's down 3 S&Ps about lunch. So let's go through this. We've got cotton. Cotton's acting well. It's 92.75 in the continuous contract. I've got an alternative wave count here. But most importantly is just walking the 9-period moving average, getting to a little bit. Now, here I can talk about an overbought condition because one of the technical indicators I have looks out and says within a couple of days there should be a pullback. But the main thing is that the MACD is still strong. The stochastic's at 81%. So that is telling me that at worst, cotton would go into a rectangle formation just with a slightly higher high, but stuck with a mid-range of about 92.50 for the next 3 to 5 trading sessions. Leg D, very strong in the weekly. Monthly chart says there's a real good chance that it's going to make a new recovery high to start leg D above the August 2013 double top, and that was I'd really say that the March double top 96.55. Next one was 96.15. So it's the March high that it has to pierce for leg D. So that's cotton. But the other thing was live hogs. I think it's LH live hogs. Yeah, lean hogs. Sorry, lean hogs. You don't know about live hogs. In leg G/C, really unbelievable vertical parabolic move. If you look at it in the weekly, it's even more spectacular, let alone the monthly chart. So something's going on. And I have to tell you, when I look at the, let's just look at G. I can't even remember the name because I've been taking it off my list for so long. CMG, that's it. Chipotle. Chipotle is trading at all-time highs. I think it's going to make a leg D in the weekly chart, and that leg D above 599.97. The moment it touches 600, I'm going to be watching it really closely to see if I'm not starting to get a sell signal. I don't know how they can get. Well, I don't know if they have as much meat, but anyway. And McDonald's maybe the same thing. Looking at McDonald's. Yeah, McDonald's made a peak D in the daily. I'm going to be watching this as well. Haven't done anything yet, but it's really on my watch list. So let me just quickly sum up some things that I'm looking at. There's been, because of drought and all other things that are going on, you have a huge move in some of these soft commodities. You've now had a big move in the metals. Gold is pulling back. Copper's way underneath what it should be, showing very poor action. And as a result, this is a market that's seeing trend changes that might accelerate. I'm looking at the airline index, and I'm saying this is really struggling here. Let's go to Pat in Dennis, Massachusetts. Hi, Pat. How are you?
Good. How you doing, Basil?
Very well, thank you.
I just wanted to check and see if you knew about the copper and the bond connection in China.
No, I don't.
Okay. When that Chinese solar company went bankrupt, and then the other day we had a developer go bankrupt, their bonds were supposedly backed with copper.
Oh, no.
Yes. So I don't know have the figures on the Chinese solar, but the builder, he was $568 million supposedly default on his bonds.
Wow.
That's what that was. So I think that's impacting copper as, of course, the people who were holding copper as collateral are probably selling it into the market as fast as they can.
They need to raise as much cash. Right.
Right. They see they're holding a depreciating asset.
Correct.
So I think that is impacting copper. They're dumping this huge supply on the market.
Well, I have to tell you something. It's either going to make building very inexpensive, or it's telling us something that we can't dismiss. But the way it's going right now, it looks to me that if copper doesn't start to move very quickly and get back to about 3.1, 3.20, and if this sell-off, today's sell-off, which looks like a volume, it doesn't look climactic yet. A big volume on the down day of the 7th of March, and then a huge down day on the 12th. Now it's lightening up. That's very interesting. Well, the day's young. We're only 2 hours into the day. So 3 hours into the day. Yeah, okay, we'll see what happens by the end of the day. Maybe not, because it's already at open interest is 106 and the volume 76,000. All right, we're going to be watching it, but thank you for that information, because if that's an exogenous event, then copper should very quickly find its median point, and to me that would be the midpoint of the big move down from the 325 area down to today's low of 2.87. So yeah, I'd put it somewhere around the 3.1 area. That's where it needs to get to. If it stays down here, Pat, then other things are going on. They could be follow-up sales. Well, I don't know if it's related.
Well, another thing that's going on, and just one more thing about copper, there could be more defaults, because China's indicate they're not going to back these shadow banking systems anymore. So, there could be more defaults in the future that are backed by copper.
That's a very good point. Whoa, I didn't even think of that.
The other thing that's happening is we may be, in other countries, may be reopening factories that are closed, because there's a big move to switch things back from China and switch the manufacturing over here as the wages going up in China, and we have good energy prices over here, and so a lot of companies are looking to move back into the United States and manufacture over here. So I think that's going to have an impact on Chinese growth.
You're absolutely correct, because I've been making a point of this for the last couple of years, actually, that although we don't realize it, there has been a huge manufacturing surge in some states way more than others, but it is starting to, even here in Massachusetts, we've had not a resurgence, but there's been a move towards the manufacturing side. So I'm beginning to think that there are a lot of very subtle things going on, and that's one of the reasons why I said that there is a chance that even if we get a really sharp decline sometime this year, whichever month it is, I don't know, but if we do get that decline, looking out, there is a chance that we could see another big move to the upside, because Buy America is just starting to filter into our thinking, and you can see that with when you drive around, you just see so many more American cars. There was a period where if you were on the highway, you did not see an American car, hardly ever. They were cabs, but they were not on the road. So this is a big change, and we should be seeing that at some point. Now, I know that there's a plethora, there's a glut of cars just right now in many of the lots because of this winter, etc., but that could have a big impact looking out, but I'm going one step at a time.
Right. I just read about a methane plant. MEOH, I think, is the company. They're dismantling a plant down in South America, and they're going to move it up to Louisiana, I believe.
Really?
They're going to bring. They're dismantling. They're going to bring it up.
Methanex Core, MEOH, trading at 66.08.
I think that's the company that's doing it. The other thing is that they're finding out that it's not safe to do work in China anymore. A few months ago, you had that one gentleman who owned a factory over there, and they thought he was going to close down the factory, so they kept him in the factory until he signed a satisfactory severance package should he close down.
I remember that very well.
Remember that? He was like a prisoner.
I remember that well. Oh, he was free to go anywhere he wanted, as long as it was on the property of the factory. I remember that very well, and that came as a really big shock.
Oh well, I think all of these and the bankruptcies and the wages, and there was another problem with an Indian factory a couple of days ago, and you just keep reading all of this, and they're finding out they don't have rule of law over there like we have here. Their investment is not protected.
Yeah, it's way more difficult, and in fact, there's a subset of laws that you've got to understand. Whatever country you're in, there's a modus operandi that you really have to be in tune with, because there could be some terrible surprises in the very beginning. I got a funny story about that. I think we've got time. Yeah, we've got time for this, and it's Larry's show. Larry likes to tell stories. I got a good friend who was in the staples business. He made staples for the builders and all sorts of things like that. No, wrong friend. It's not that friend. It's another friend. I haven't told the story for so long I had to remember who it was. It was another friend from overseas. And he was telling us that his factory, they sold material. Their thing was materials, cloth materials, and they had basically conquered Russia. He said, I had to drink myself silly, but when I finally did that, I got the contracts. I knew exactly what to do. I told my boss, I'm going to China, and I'm going to do the same thing with China. And his boss said, are you sure about this? He says, hey, if I could go to Russia, and it took a long time, but if I could get the Russians to do business with us, I think the company was the sales office was in London. So he goes off to China, and he thinks he's got a great deal. He's got to meet people there. And what happened was, you have to have somebody from China who is going to kind of represent you. So he finds somebody, etc., and he goes there, and he's got all his stuff, and things seem to be working out very well in terms of getting product over there, but he hadn't really got much money back yet. So he flies over and he has a meeting with them. This is a true story. And he's sitting there and he's talking to the CEO of the factory that was doing the business, that was producing the materials for them. And he puts his arm on a big swath of material, and he's talking away, and then he had a white shirt on, and he suddenly waves his arm, and he looks at his shirt, and it seems to have the pattern of something. And he looks closer, and he says, That's the pattern of this. And then he realized they were copying all his stuff, all his designs, and in fact, they were putting it on in a very poor fashion. This was a long time ago. In a very poor fashion, and they were ripping him off.
Oh, no.
Can you believe it? It was just purely by chance. It just came, the stuff, it was so fresh that it came off on his shirt. So you realize there and then he had to change things. And, of course, they made the concessions and all that. But I thought that was a telling story. I mean, it was a long time ago. And I know that a lot of that was going on, and a lot of that had to stop, because if they wanted to continue getting overseas business, things had to change. So there's a culture in many countries, and I'm sure they find there's a culture here, where you've got to do things in a certain way. So I think you're absolutely right, and I think that many countries are starting to find, many corporations in America are starting to find that, you know what, I think we can, in China, the standard of living has gone higher. So therefore you have to pay higher wages. And I think they're finding that it really is beneficial to them. Not only that, when I go shopping, it's very hard to find. I try to find made in America. I mean, why not? I'd much rather do that. I'd rather give the business to, Americans.
Exactly.
So I think you're onto something there. I've done a bit of work now while we're talking about the MEOH. This is in leg D. This is, what did I say it was called? Methanex Core. It's in leg D in the monthly. Just about, I'm watching it closely, but I haven't got any signals yet other than to say the on-balance volume is turning down. Stochastics a little bit weaker, still at 88%. And the weekly chart has made a peak E. I don't think it can get above 73 something. It's at 66 right now. And peak D in the daily. So this is a great looking chart, but shorter term, it looks to me like it's going to pull back. And if it comes back to the 62 to 59 area over the next 3 weeks, it might be something to look at. But I think you got a point. Certainly got a point about that copper. Thank you very much for calling.
Oh, thank you, Basil. Nice to talk to you. And it's really getting hard to find charts that haven't topped out in the daily, weekly, and monthly.
I keep going. I look at those charts, and I must tell you, I'm nervous about the monthly charts. We've got another week and a half to go with the month, and I'm looking at monthly charts that even this here is a great-looking chart, but the monthly chart is saying, hey, if you make a peak D here and start to pull back, 58, that's 8 points. 58 is the 9-period moving average in the monthly chart. So we're going to watch these very closely. I haven't been to dentist for a while, and I miss it. Are you on the theater side or the other side?
We're on the theater side, the north side, over by not the south side with West Venice Beach and Craigville Beach, the north side with
where the bay is.
Lake and all of those nice places.
Ah, that's great. My first experience with Dennis was years ago, and I loved it because it's got warm water. I hate cold water. Thank you, Pat. Thanks for calling.
Okay,
thanks for the information.
Basil.
Thank you very much.
Bye now.
I'll be right back, folks. Dow's down 6, S&P's down 55 cents, and I want you to talk a little bit more about the volatility index.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi folks, Basil Chapman. I wanted to go through a brief overview while I got a chance here. I want you to look at just real quickly again the VIX index. This VIX index is going to be really key because it's trading underneath the 200-period moving average. If for whatever reason Yellen starts, whatever happens this afternoon, if the Dow, I'd say Dow up 40 means one thing, because 40 points at this particular, holding 40 points this afternoon would be very impressive, especially if it closes in the Dow up 40 points. That'll be about 5.5, 6 points in the S&P. Why? Because it'll be the third very good candle. I don't fight candles, but if there's a doji type candle today, which I think, and then a down tomorrow, that's what I'm anticipating. But that would say that the VIX will start to climb from the 1440 area, and by tomorrow afternoon will be above 1508, or at least by Friday, without going much lower. But if the VIX goes at 1440 right now, if it starts to go to 1420 this afternoon or lower, you'll get that spike. There are just enough stocks to allow for a spike. So I just wanted to mention that. Now, the other thing, I just wanted to look at EUR USD just for a moment, just to say that I had spoken about that, I think, in my show earlier, my Tiger Technicians Hour. Don't forget, my service is the opening call, and if you're interested in this and you think that I'm giving kind of information that intrigues you and you want to know more about it, let me show you right here. Go to the front page of TFNN, subscribe a webinar by Basil Chapman, get the opening call for a month. It's usually 2 weeks, but it's a month free, as well as the webinar I'm doing tomorrow night on the MACD and the slow stochastic, probably add the 9-period moving average. But most importantly, you'll get the free you'll get the webinar. It's only for subscribers tomorrow night on the MACD and the slow stochastic. You'll get that for free. So now let's go back to this. I'm looking at the euro. Euro's made a peak E. That's what I'm calling it right now. MACD is still good, but a little bit turning, flattening out the fast-moving average. The stochastic's at 83%. That's good, but that asymmetric, no, this is symmetric triangle, says a spike above 1.394 says, great, I can now test the high of 1.396. And if I do that, I'm going to call that F, but it might have recycled. I'm still calling it an F just for now, and then we'll see what happens. But if it does that, there's a good chance with this pattern, this symmetric triangle, that you come right back and you'll be trading at 1.391 very soon, within days. On the downside, a break underneath 1.385, that's very negative. So that's what I wanted to say there. The dollar is struggling to try to turn up. It's almost the inverse of the same pattern. It's making a candle, and it's making an H pattern in the stochastic that says, hey, I might be able to move up until the dollar, which is at 79.49 right now, 79.50. Yeah, let's call it that, 79.50s. If the dollar is able to break above 79.70 immediately, 79.70. Then immediately there's a chance of 79.50 to 80.20, because if the euro tanks, then you'll see the dollar climb very quickly. But if it doesn't do that, boy, the left side low of 79 back in November of last year, 79.15, don't break that, dollar, because if you do close underneath that, that's not going to be very good. So quick wrap up. Gold pulling back just like we expected. There's still residual strength in the general market. I'm watching the VIX to tell me what's going on. We do have we just added a long position today, which has done real nice, up over 1%. Hey, it's an unusual stock to be moving up like this, but it's a very late, a heavy-duty cyclical. So that may be why it's working. We are short. The shorts seem to be working right now. The day is young. We'll see what happens by the end of the day. Check out my opening call. It's my service, my daily service. And please try to give the webinar tomorrow night, MACD and Stochastic, a chance. See if you like it. And you'll have my newsletter for a month. And I will be here to do Larry's show tomorrow afternoon as well. Thanks for being here. And stay tuned. Great show coming up with... who forgot? Oh, the diagnostic trading area. Daryl coming up. Thanks for being here.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.